Hey everyone, my name is Destiny. I am the owner of Treasure Box Taxes, and today I'm going to be giving you a brief breakdown exactly of how is your tax bill calculated? How does the government determine whether you get paid or you have to pay in? So let's jump right into it. There's two parts to this. There's your taxable income and there's your tax liability. Now, your taxable income is basically what you get paid, whether it's on a paycheck, whether it's from a side hustle, anything that you're getting income into your bank accounts, deposits, that's your taxable income. Other things that can go into your taxable income is your unearned income. People like me, you're young, you don't really have a lot of investments or retirement accounts or savings. We're probably not gonna have a lot of unearned income. You might have a couple $100s here and there, but you're not gonna have a lot. So the majority of your taxable income will come from your paychecks. Now, moving on, in order to reduce your taxable income, you do that through adjustments and deductions. Now, there's standardized and itemized deductions. We don't have enough time to get into that today. I will be posting more videos about that. But just to keep things simple, just know that your taxable income is reduced through adjustments and deductions. Now, on the other side of the spectrum, you have your tax liability. Your tax liability is basically the amount or the percentage that the IRS thinks that you need to pay them. It's standardized, it's put out by the IRS every year, and my next post will tell you how the tax brackets and tax liability, all of that actually works. So to reduce your tax liability, this is done through payments and through credit. Credits is like cash. So cash is king. Now, when you think about credits, there's two types. You have refundable and non-refundable. Non-refundable basically means that it will decrease your tax liability down to zero, but you won't get a refund from that. Non-refundable. Now, refundable credits, that's what's gonna put cash back in your pockets. These are credits like the American Opportunity credits, additional child tax credits, and like I said, I'm gonna be going into more detail later as tax season gets closer. Another way that your tax liability is reduced is through payments that you have made throughout the year. Now, I know a lot of people, you're trying to claim, your highest allowance, so you don't have to pay that much during the year. Well, in the end, you're still gonna have to pay it. You're just gonna have to pay it in one lump sum instead of having it taken out gradually. So I highly recommend to make sure that you are taking out enough during the year so you don't have to pay in at the end of the year. To sum it all up, if you have paid in more than your tax liability, then you get a refund. If you have not paid enough, you're going to owe, unfortunately. Now, people think that they are saving money when you have this free software, you're typing it in, you're answering all the questions, and then it spits out a number. The difference between going to a tax professional and using the free software is that there's no logic, there's no reasoning behind, the tax software. You need to go to a professional. It's like going to the doctor. You can look up everything on WebMD, you can plug it all in, you can type in your symptoms, and it's gonna spit out 5 different diagnoses that you could have. One probably being cancer, because cancer has, I feel like every symptom in the world links to cancer. And you probably don't have cancer, you probably have a sore throat or whatever the case may be, but you get my drift. Most tax professionals out here are offering free consults. So if you want a free consult, I am available. If you enjoyed this video, make sure you look out for my post later today talking about tax brackets, and I will also be going into more detail on adjustments, deductions, credits, and payments in the upcoming weeks. All right, y'all have a good day.